Good afternoon, everybody. I found that Facebook. We bought puts on it. Some of our guys did. They jacked it $2.31 up above that 340 put strike, but nonetheless, they still jacked it up. Right now, we just hit 316 on the low, 315 to be exact. So you can see the intraday high on Facebook, 342. And people that are along Facebook are in the house of pain, and that they are. But we're not, because, like I said, we had 340 puts on it, and they had walked it up for 5 or 6 days like they did with other ones. But listen, when algorithms push prices, they end up losing in the end, and this is the example of that right there. So once again, I don't want to confuse people, but the traders know what we're talking about. So nonetheless, there is the big drop on the 1 minute. Bam. And they did not report earnings today. It was long overdue. It was a algorithm that took these prices up there to such lengths that they were going to fail. And we see the evidence of that here and now. So we're going to be breaking below key moving averages now on Facebook. And Facebook has a lot of issues. And just because an algorithm walks the prices higher, they come back to right where they started their little manipulation, and they give up all the gains, and then everyone gets sucked into buying it up at the highs, and now they're in the house of pain. As it gaps down and continues to go, we will buy what we call the left elbow. So with the big gap down, we'll buy Facebook for a fast entry. We'll take $2.50 profit and we'll say goodbye. And it will have a bounce off of the lows, and we'll let you know it now. Now, do you know how to trade it, or do you need to learn how to trade it, or do you want to trade it with us? But this is tomorrow morning's trade. Buy that gap down, hit that entry on the low, let it bounce, unload it, go short, buy it long again, and do that all day long.